Hello everyone, I'm Dr. Stock and this video is for entertainment purposes only. Today I'm here to talk to you about the crypto markets, what I see with Bitcoin, Ethereum, and then finally Cardano I think is getting to an interesting point, something that really deserves our attention at this time. So when I bring that chart to you and bring you that news, I think that you'll see what I'm talking about, and then from there you can make your decisions on whether or not it's something that you would like to take a further look into. And you're welcome to share your thoughts with me down in the comments. With that said, let's get ready to rock. Welcome back. We have an interesting time in the markets right now, in the financial markets overall, and I think that not only is it affecting some of the high growth and high tech that we have with all the inflation news. We have the CPI data, by the way, coming out on January, I almost said December, on January the 12th. That is something that I think is really going to wreak havoc on the markets, or at least hold them in place where they are. So for tech, high growth, crypto, any of those risk on assets that we have, with that in mind, that's an area where we could really see a potential further selling off, or at least holding steady where they are right now until we get those readings. Right now, the expectation is about 7% for that CPI data for the month of December. So we'll have to see what comes out with that. If we're at 7%, I think that we could still experience a little bit of a drop, or we could hold steady, or maybe even recover a little bit because, hey, it's not worse than we were expecting. If it's lower than 7%, I think that that could be really good and give us a little bit of ground back that inflation isn't running as hot. If it comes in way under that 7%, then I think that we could see a strong recovery with the tech stocks, risk on assets, we should call them, including crypto could be one of those places. Now, with that said, December was a huge month for buying. I think it was an incredible month where a lot of money was spent. That means that there's a lot of demand out there, a lot of shopping, despite higher prices anyway. And I don't know, I think we could honestly come in right around that 7% mark. And if it does come in a little bit hotter, I think it's to be expected. But I do also expect there to be a drastic slowdown with the rate of inflation throughout Q1. And so that means that'll be reflected possibly by March or April. But that might be the time that we get that first federal rate increase, which has been speculated to happen in March. So that could happen before we start to see a major inflection down. And honestly, what a great plan. You get like, hey, we increased rates and look, inflation went down. So it could be something that could set up a really good narrative for the Fed moving forward. And I can imagine that they would be seen more favorably. So let's move on from there. Omicron variant is also another thing that also made headlines, and as long as that continues to make headlines, and as long as cases continue to rise, those are the things that can continue to at least add a little bit of spookiness to the markets, even if it's not as big as Delta was or previous variants that we had of the coronavirus. So those are just some of the things that we have. That fiscal policy, the fact that we don't have as much quantitative easing, that we're starting to tighten, the Fed's becoming more hawkish. I think that's the main reason why we see the drop that we do in crypto. Crypto has that added level of regulation, so that's also something to pay attention to. So as long as regulation becomes or stays a question mark, what are we going to see in terms of regulation until that gets answered, whether it's for the good or the bad for regulation. As long as it's a question, that's the uncertainty and doubt part. Even if it's not necessarily something to be all that fearful about, that's something that could still hold down the crypto markets in the meantime. So with that said, let's move over to the charts. So you can see Bitcoin is hitting support right around this red line, right around that $40,000 mark. And if that CPI number comes in at 7% or greater, I think at 7%, I think we push down maybe a little bit under. And honestly, even just anticipation on Wednesday of that CPI number coming out for December could be something that pushes us under. If it comes in much hotter than 7%, I think that we could see a much larger push down for this. And the next really solid area of support that we have is at $30,000 per BTC. So that could be something that would really, really push us down overall. Now, I do believe that this is all a price that we will get back, that eventually Bitcoin will show new all-time highs. It might take a large part of 2022 to see those new all-time highs come back in. I don't own any Bitcoin itself. I have some other crypto assets out there, Ethereum being one of them, and then Cardano I also hold, which is also in this video. These are just things to watch because it really will still have some sort of influence over what we see happening with the other coins that are not BTC. Here we're looking at Ethereum's chart, and you can see that we don't have the same support at the $3,000 level that we had for Bitcoin at the $40,000 level, that we could still stand to drop down to about $2,700. And after that, we drop down. The next area of major support that we have is around that $1,700 mark. Now, for me, if we should ever see ETH going that low, for me, that's a major buy-in period, because it's something that I believe that we will come back strongly from, and that we could have a return in multiples throughout the year of 2022. And we still have the merge ahead of us, and I think that Ethereum, with the supply shrink that'll happen to it, and the continued demand that we have for ETH, I think that those are things that could cause us to go up wildly from the prices that we're at now. So if we do hit that $10,000 mark during 2022, should that happen, from right now, it's just a little bit over 3x, which is still incredible return. 3x within any single year on any asset or any security that you might happen to have. People would chase that all day if they could. So keep that in mind. Now, if we drop all the way down to the $1,700 level, now from there we could go up about 6 times from where it's at to take us back up to approximately that $10,000 level. Now, that would be more than double what we've seen for the current all-time highs, so that would be very ambitious, very exciting, and that would mean that we had the bull run sustaining through 2022, despite the fact that we have a lot of the hawkish Fed, that we have the inflation numbers that we do, so there are a lot of assumptions tied in with that. At the very least, I think that we'll see that bottom around 1,700, and I think that we could at least retest the all-time highs that we've had. So a little bit more of a bearish case for 2022, that we at least return to the all-time highs. A bullish case, I think that we actually do exceed and possibly crush those all-time highs that we have for Ethereum. The fact that it hasn't dropped as much as Bitcoin could be really good news for us, and there are analysts out there expecting the flip to happen by market cap from Ethereum to Bitcoin, and that could happen within the next 3 years, and that's something that I could totally see happening as the use cases continue to build for Ethereum. The last one that I have for you is Cardano, and I've been doing a lot of reading about Cardano recently, especially concerning their concurrency issue, and it turns out that it's the unspent transaction output model that they have, that they don't use the typical one like you would use for Ethereum. They have one that would be called the extended UTX or EUTXO. Let me say it slower, EUTXO. So the extended unspent transaction output that you would have, and that is a different architecture than you would have for Ethereum. And so the concurrency issue that gets ran into by some of the dApps that were trying to deploy on to Cardano after the Alonso hard fork, they were like, hey, this isn't working. And Cardano, even before it went live, even just on the test net for the to put out the smart contracts on Cardano, it was something that was already known about. It wasn't something that they were blindsided by. And Hoskinson's response to this is that that's in the intended design, and it's part of the future scalability that you just need to develop for the EUTXO model. And until that development takes place, and mind you, there is development already taking place, there are already solutions that take advantage of it, and really it brings about the parallelism that brings about scalability, which is absolutely huge when we talk about the transactions per second that we have and the efficiency of the blockchains that are out there. Now, Cardano being proof of stake like it is, it also is pushing for everything that you would want. When you talk about security, scalability, and then also decentralization, Cardano's pushing for all of those things. And when you listen to the way Hoskinson speaks, taking away the power of the central authority over really anything, and then decentralizing it to have it more distributed and more democratized are things that he most definitely stands for, and is some of the way that Cardano is being built. A lot of that is already baked into it, and it is future focused. So Cardano's time might not be right now. However, it is something that with the eyes on the future is something that it's being developed for, and I think that future is much nearer than some people are giving it credit for. So basically, the Alonso hard fork was happening back in here, and you can see the price take off to about $3 per ADA token, and the price just tapered off since then. And the reason is that there isn't a huge use case. There's not a lot of demand for the ADA token because there aren't really any dApps developed that are fully deployed on Cardano. So that's something that, as those use cases build, and as we get further development and more DeFi adoption, total value locked, and people need that ADA in order to keep the network going, in order to weigh in on governance. As those use cases build for ADA, we're going to see those prices spike, and we're going to see the price of ADA, spike drastically from here. So you can see it currently at support right now, and I think that as those use cases build, we're going to see a slower, steadier climb. That right now, all the way, if we look back all the way to March 13th of 2021, we can see that it was at about $1, and now we're returning to about $1. And so this is really incredible support that we have right now, seeing it at about $1. It's trading at $1.10 right now, so just 10% up above where we find incredible support for ADA. So if ADA does drop below $1, to me, that's a huge buying period. I have been dollar cost averaging over time, and I've been holding off to wait to see for my most recent dollar cost average, but I just put in more last week, to put in more this week or sometime soon. I'm going to hold off to see what sort of news we get, unless I see it go under $1, in which case I will buy a little bit more heavily with it being under $1. So Cardano is one that I think that could return multiples at the $1 mark. I think that Cardano to $10 by 2025 could be something that would be not, I don't think it's incredibly ambitious. I don't think it's incredibly bullish. I think that as the apps come out, and as Hydra gets deployed and we get that scalability that can push us to, some people are saying that scalability could take you from hundreds of thousands of transactions per second up to millions of transactions per second. Whereas right now, I think that the current transactions per second for Cardano is about 300 transactions per second. So bring in the parallelism, bring in Hydra, bring in the scalability, and that goes up incredibly from there. I've even heard the number 3 million tossed out there for transactions per second, which is just hard to fathom given right now the fact that it's only at 300. So 2022 I think is going to be an important year for Cardano, and then watching that adoption play out, watching DeFi move in, watching the apps move in, watching them take advantage of that parallelism that's available in Cardano, I think is something that as it happens, that we're going to continue to see use cases for the ADA token, and that we're going to see its price spike considerably from where it's at right now. That's what I have for you guys today. If you want to hear more about what I have to say, check out my Patreon link down in the description. Also, while you're down there, if you'd like to further support this channel, you can do so by using the referral links to Moomoo and Webull by clicking on those links, signing up, depositing your money. You get a bunch of free stocks. They have a lot of really good promos going on right now. I get free stocks through the referrals, so thank you very much for that. A nice, easy way you can support the channel is also to click the like button if you like what's in this video. And let me see also down in the comments if there's other cryptos that you would like me to talk about. If there's other things that you want to include about Bitcoin, Ethereum, Cardano that weren't covered in this video, absolutely put those down in the description. And I'm sorry, down in the description, put them down in the comments, and I'll get back to you as I can, and it'd be great to interact with you that way as well. All right, I better wrap it up before I completely lose train of thought. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.